Hi everyone, welcome back to KayaPlus TV with me, Jupan. Now today, we are going to look into a few investing methods that you could actually learn before you pick to become what kind of investors that you want to be. Just to be clear, investing and trading is totally different, and today we are just going to focus on the different kinds of investing methods that you can actually learn. Are you ready? Let's go! Now the first segment of investors that we'll look at are the dividend investors. Also known as the income investors, these individuals look for cash printing companies with business models so strong and so stable that once any cash is pumped into the company's bank account, the management is sure to disburse a portion of it as cash dividends to investors. So companies can grow bigger and bigger, generate more and more cash, and in the end might be paying out more and more cash dividends to these kind of investors. Next, we look at the growth investors. These individuals particularly look for small companies which has a special business model. Now this business model can be disruptive to what we are currently using today. So if this small company is helmed by a great management and seek to disrupt the current market situation, and this is where the company would start small but eventually grow to become the next big company in our lives. Thirdly, we look at the deep value investors. Now deep value investors specializes into looking at cheaply valuation stocks. Compared to growth investing, it is totally at the opposite spectrum, where deep value investors actually look for share prices which are traded below the book value. Last but not least are the short sellers. Now you might be surprised why short selling is actually considered a kind of investing. Conventional investors usually buy stocks that can provide a return, be it in terms of dividends or share price appreciation when the business gets bigger. Short sellers actually look for potential fraudulent companies, sell their shares first, and then do a detailed report and analysis. And once this report and analysis is published out to the public, most of the other investors will also throw out their shares or sell off their shares in a panic selling mode. And this is where a short seller actually makes some money by finding fraudulent companies instead of companies with growth potential. So I hope you really enjoy the different kinds of investors that I'm sharing with you today. All in all, even though that each investors require a different kind of returns to their portfolio, nevertheless, the analysis method, the risk assessments are mostly the same, and each investors actually focus on different aspects or different performance index of a company to justify whether this company suits their investment appetite or not. So till we meet again, I'm Jupan from KayaPlus. See you soon. Bye bye.